Gold prices are popping for a second straight day as a number of factors are pushing the yellow metal back towards $1,450 an ounce. Here to talk to us about it is Axel Merk of Merk Investments. Axel, thanks so much for being with us.
My pleasure. What a difference 2 weeks make.
Yeah, so what do you make of this? Why are we jumping back up after a huge historic sell-off?
Well, clearly 2 weeks ago, we had everybody who had leverage was forced out. When you have 12 years in the bull market, obviously the folks who are bullish on gold thought, well, if I take on some leverage, I'll make even more money. And that doesn't work so well in a forced sell-off and a forced liquidation. At the same time, anybody who liked gold before the sell-off still likes it. Anybody who didn't like gold before the sell-off doesn't like it now either. And so we really haven't had too much of a change in fundamentals. The one change that did happen was that ahead of the gold sell-off, we had a couple of fairly dovish FOMC members talk increasingly about finishing out this purchase program, the QE program. But the moment that the market took a nosedive, and it wasn't just gold obviously going down, they came back immediately and say, no, we'll print plenty of money. And so the drivers are firmly in place, and gold is snapping back now.
So, Axel, what do you make of this? Are we going to see more of the same? Is gold going to keep rising? Or are you still a little bit tepid on making a call like that?
Well, clearly, anybody who bought gold the last 2 years has a paper loss now, maybe not exactly 2 years right now, and so there will be some folks that are selling into strength. We have this transition that folks who bought gold because of a collapse in the Eurozone, well, they see the Eurozone sticks around, and some of the folks who thought inflation would be rampant are not in there yet because in many of the indicators it is not quite as apparent yet. So we have this transition period. Having said that, we've always bought gold simply because there's too much debt in the world. Mm-hmm. And depending on the cultural differences, people will act differently. In Europe, they try austerity, but in Japan, in the UK, and the US, we will print money to deal with our debt problems. And so the forces that promote gold will be there for a considerable time to come. But yes, on a short-term basis, the volatility in some ways is good because it kicks out the weak hands, it kicks out the momentum players, makes for more sustainable rally down the road.
Sure. So speaking of Europe, there are reports out that the European Central Bank might reduce rates again. What does this mean for gold?
Well, everybody's jumping all over themselves to make that call. We're not so sure about that. Okay. Germany, Northern Europe already has negative rates on their treasuries. They need narrow spreads. They don't need lower rates. Surely the European Central Bank doesn't like to have a strong euro, but I would not bet my gold or my house on them printing lots of money. In fact, Europeans are the only ones mopping up liquidity because they're more demand-driven, that banks are giving back their loans, whereas the rest of the world is printing money. Europe is not going to drive up gold. It's the Japanese, it's the Brits, and the Americans that will.
And final question, yes or no, Axel, are you buying gold at this point?
I bought some last week, yes.
All right, Axel. Well, thanks so much. You heard it from Axel. Keep an eye on all of the events going on in Europe. And here, we're seeing a little bit of run-up in gold. I'm Joe Deaux, The Street.